Hello everyone, welcome back to the channel. This is Day Trading Futures with JD, and I'm JD. So I wanted to take a moment and talk about when not to trade. You see a lot of people, a lot of channels, a lot of videos, they go over when to trade. My last video was some of the setups that I look for, but I wanted to go over what a consolidation looks like. Here we are in platinum. This is on a 5-minute chart. And it's very easy to get caught up in a consolidation, especially if you've been looking at this area right here that is, lower lows and continuing with this bearish trend, right? And then we have like a bullish divergence there, and then it comes back up. Sometimes you're not going to see that bullish divergence, either because the wicks look crazy, or you're on a different time frame, and you're not going to notice that it does, that the trend is reversing. Okay, so one of the things that will help you stay out of or trading during a consolidation that would look like this is by drawing up some trend lines. Okay, so obviously I have the support and resistance right here. Let me get rid of those. And this is the area that I'm talking about. Now, of course, this is almost 10, it's about 8 points. And yeah, you can make some money with 8 points in platinum. But when you're in the middle of a trade, it's best not to get in, or it's best to get out when you start seeing the change of character. And I think we would see this change of character right here. Let me make that a little larger. I think this is where that change of character would go, right? Because actually it would be about right there. Well, let's see. Let's see right here. Yeah, okay. Well, it's right here during this timeline. Yeah, okay. So, yeah, you do have break of structure here. But whenever this low right here starts making lower lows, and we're getting a lot of this break of structures and the change of characters quite often in this time period because of this consolidation period. All right, so like I said, one of the things, now of course this trend line is just to help you see the chart, okay? This trend line is not, because a lower frame trend line is only going to help you look for structure. It's not going to be entry signals, okay? And yes, you could enter there at the 1531 and it would ride up, almost 20 points. But, if you didn't, let's see. But the key is to stay out of this area right here, especially whenever you're just getting in and out of trades, doing some scalping, that type thing. Because obviously we're not going to see this structure. We're not going to see this consolidation. But one of the key indicators of a consolidation is most indicators are going to give you a bunch of mixed signals, right? And then also with your moving averages are going to kind of level out. You're not going to see much space between the 20 and the 50, and things will just kind of level out. You will have breaks, and then it'll come back down and retest. And when that happens, what I suggest is to just extend out the trend lines so that you can wait for new structure. And I know trying to mark up your charts and make it look crazy, sometimes when you're marking charts, plus you have all your indicators up, I know it does look a little busy. So what I like to see is, so like right here. So you have bearish change of structure, but it doesn't go anywhere. Comes back up. We have another change of character, bullish, but it doesn't go anywhere. It comes back down, right? It's consolidating. And then what happens? We have another change of character. This time we do have a break of our trend line, but that's only to help us see the structure. The main break will be out of this support area. And actually, I would take it right here, okay? So you have change of structure here. And then you have, now we actually have a break of structure, right? So this would be, and I would come down, and I know it's only 5 points, right? But it's a higher probability trade because now we have structure, okay? So I would get rid of this trend line because, like I said, this isn't to mark larger time frames. This is just to help us see the structure. All right, so like I would mark it down here, okay, because it looks like it's consolidating again in this area, all right? And then as soon as it breaks this trend, comes up here, and it goes back into this consolidation area, but look at all this bullish momentum getting out of this consolidation area, okay? So whenever it goes to a break the trend line, that is, when it breaks the trend line, when price breaks the trend line, comes back up, now we have a break of structure, which is a good thing. It's not a bad thing. It means that this structure is continuing, okay? This market trend is continuing up until we have bearish change of structure, okay? And actually, it turns bearish change of structure again. So then it moves on, right? And then, of course, we don't have anything during this time right here. And then we have change of structure. And what it would be wise is whenever it comes out of consolidation is to wait until you actually see, until you actually see the structure form, okay? So we were bullish. We have a bearish change of structure. It's coming down. Now we have a BOS, a break of structure. And then this would be a better setup than entering here. When I mean better, a greater probability of winning that trade. And then I would set it for that other, right? So that's kind of a quick rundown of when not to trade. You hear people all the time talk about don't trade during consolidation, or I've heard traders say that, but they don't ever show you. They show you like in their example, they show you like a really flat area like this right here that's only covering, maybe 5, this is covering like 5 points right here. And they call that consolidation, and they use that as your only example. The only problem with that example is sometimes your consolidation area may look good and may cover 10, 15 points. And yeah, you can trade that. You can drop it down to the 1 minute time frame and you can trade that. But you're risking a lot. Each trade you enter in that time period will be a lot riskier. If you just want to scalp for $50 a trade, that might work. But anyway, to keep from rambling on, let's talk about this challenge that I have. This is for the month of November. Once you click the link down in the description, it'll take you over to this landing page. This landing page will give you the rules and kind of the details of this November challenge. As you see here, there's 24 days left of this challenge. It's for the month of November. Here are the requirements to be a part of this challenge. You have to use my affiliate code to sign up for any of the Apex Trader funding accounts. Once you pass your evaluation, send me notification of your passing. Then I will reply back and give you a choice if you would like a complimentary hotel stay for either Orlando or Las Vegas. And then once you make your decision, you have up to 18 months to pick your vacation date. All right, so again, all I need for you to enter this challenge is your name and your email. Once you hit submit, it will take you over to this thank you page. On this thank you page, this is my coupon code. This is where I get credit for you signing up for an evaluation. And this is one of the required steps on how to be entered into this challenge. So highlight this coupon code, copy it. Then whenever you click, this is a clickable link. So whenever this will take you over to Apex. And as you see, they are currently running 70% off of evals, and there's 4 more days left at the time of recording. And it doesn't matter if you pick wealth charts, Rhythmic, or trading view, Tradeovate. It doesn't matter which one you pick, and it doesn't matter, and you can reset. So if you have a bad day of trading, you can reset and still be a part of this challenge. Just remember that you have for the whole month of November.